I found this neat tool recently on the ETF Research Center website called Fund Overlap. So today we're going to take a look at the dividend-focused ETFs I have. Welcome back to the Financial Beanstalk. My name is Nick, and as you know, I love my dividends. And ETFs are probably the truest form of passive income that's out there. Just to recap real quick, an ETF is like owning a basket of stocks. So you own a small portion of a bunch of different companies. ETFs track a certain metric, so really all you need to do is find an ETF you like, invest consistently, and you start making that passive income. You don't need to track the individual companies because the fund managers do that for you for a very small fee. Since this is my dividend-focused portfolio, over the course of investing in it, I found 4 different ETFs that track certain dividend metrics. But when I found this fund overlap tool, I asked the question, should I keep investing in all 4 of them? Or are they similar enough to where I could consolidate them and just invest in 1 or 2 of them? And those dividend ETFs are... Introducing first, fighting out of the blue corner with $2.97 billion in assets under management, with an expense ratio of 0.3% and a dividend yield of 4.75%, the Invesco S&P 500 High Dividend Low Volatility ETF, SPHD. His opponent, fighting out of the red corner with $22.33 billion in assets under management, with an impressive 0.06% expense ratio and a dividend yield of 3.41%, the Schwab U.S. Dividend Equity ETF, SCHD. Tonight's main event is a fatal 4-way, so fighting out of the green corner with $36.15 billion in assets under management, an expense ratio of 0.06%, and a dividend yield of 3.04%, the Vanguard High Dividend ETF, VYM! Our last member of tonight's fight, fighting out of the yellow corner, with $3.19 billion in assets under management, a 0.07% expense ratio, and a 4.29% dividend yield, the SPDR Portfolio S&P 500 High Dividend ETF, SPYD. So basically what I did was just compare each ETF against each other. You can only compare 2 at a time, so I did have to run through it a handful of times, but here are the results. There is a ton of information comparing each ETF, but just to keep it pretty simple, we're just going to look at the main overlap. First up, we've got SPHD versus SCHD. You just fill in the box under Fund 1, then fill in the box under Fund 2, click Find Overlap, and voila! So again, we're just mainly looking at the overlap. So we've got 32% of SPHD's holdings are in SCHD, and 60% of SCHD's holdings are in SPHD, giving us an overlap by weight of 18%. Not bad. 92% of SPHD's holdings are in VYM, and 11.1% of VYM's holdings are in SPHD, giving us an overlap by weight of 24%. Our last comparison for SPHD, 80% of SPHD's holdings are in SPYD, and 50.6% of SPYD's holdings are in SPHD, giving us our highest overlap by weight of 50%. 89% of SCHD's holdings are in VYM, and 21.4% of VYM's holdings are in SCHD, giving us an overlap by weight of 31%. 24% of SCHD's holdings are in SPYD, and 30.4% of SPYD's holdings are in SCHD, giving us an overlap by weight of 18%. Our last matchup of the night, 15.1% of VYM's holdings are in SPYD, and 79.7% of SPYD's holdings are in VYM, giving us an overlap by weight of 23%. Here's all of them compared side by side based on the overlap by weight. And here's all of them compared just based on the holdings. As you probably noticed, VYM had a high percentage compared to all the other ETFs, but that's because VYM has 417 holdings in it, whereas the other ones have between 50 and 100, which is why the overlap by weight is the main thing that we're looking at here, because it actually takes that into account. After running through this, the main thing that jumped out to me was how close SPHD and SPYD were at that 50% overlap by weight. As you probably know, I and everyone else on the internet loves SPHD for that sweet, sweet monthly dividend. But when you compare it to SPYD, I think SPYD comes out a little bit ahead. They both have pretty much the same dividend yield at that mid 4% range. Their 5-year charts,
virtually identical.
And one of the most important factors, SPHD's expense ratio is about 4 times higher than SPYD. SPHD has an expense ratio of 0.3%, and SPYD has an expense ratio of 0.07%. In my opinion, they're
virtually identical.
So why wouldn't I pay less for the exact same performance? Sure, I don't get that monthly dividend from SPHD, but at this point, I'm invested in enough companies that I'm still getting monthly dividends, they're just coming from different places. At this point, I have a lot more invested in SPHD than I do in SPYD, so it's still up in the air what I'm gonna do. I likely won't sell my SPHD to put that money into SPYD, but I might stop investing in SPHD and instead put that money into SPYD. But let me know in the comment section below what you would do. The other close matchup was SCHD and VYM. Again, similar dividend yield at that 3% range, but VYM is very broad with its 400 holdings, and SCHD has actually had more overall growth just in the stock price in the last 5 years. So I'm fine with investing in both of those right now. If you go into any of the threads in the dividend subreddit, you'll notice a lot of comments bring up SCHD, and for good reason. Like I mentioned, it's got a solid dividend in that mid 3% range, and it's had solid growth over the last 5 years. So it's basically the best of both worlds. And personally, that's where I've been consistently investing over the last few months. But that's not financial advice. I encourage you to run through this tool with the ETFs that you own. And like I said, there's a lot more information that I didn't cover today. So of course, I'll leave a link to the ETF Research Center website in the description below. And let me know in the comment section below if there's an ETF that completely trumps all the ones that I'm currently invested in. Because I'm sure there's something out there that I could add. Then go ahead and YouTube mumbo jumbo that subscribe button, that like button, and that bell notification so you don't miss any future videos. I truly appreciate you watching, and let's continue to grow this beanstalk.